Okay, we should be recording. And then
Perfect.
I'm also going to take notes. It's actually automatically going to take notes because I'm recording, I suppose. But
Okay.
what I'll do is I'll make sure after this is over, I'll have to have my IT team turn it into a YouTube video, but I'll send it over as soon as they're done. They usually do it pretty quick.
Okay.
But
Nope,
what
that sounds good.
what's that?
Nope, I think that sounds good. I guess I do want to preface, it was very timely, your follow-up, because we were at a lunch when you followed up earlier this week with a prospect who has your program in place today.
Good.
And
Okay.
I am obviously not familiar with the program, so kind of an overview of the program would be helpful. And then I think we had some just compliance, like if we can touch on just compliance and tax components for what you see for clients, I think that would be super helpful.
Yeah, absolutely. So I'll walk you through an overview, answer any questions that you have as we go through, but I'll touch on those points for you.
Okay.
Just a little background for you about BeniComp. We have been in business more than 60 years, and we've been issuing this policy more than 30 years. We are the oldest and largest executive medical reimbursement policy in the nation, and we do already work with several Mercer consultants. So if you ever needed information on who else we work with, I can give you that as well.
Okay.
And this policy is fully insured and supplemental. It's meant to fill the gaps of the base medical plan, and it's going to reimburse any out-of-pocket medical, dental, vision, pharmacy, as well as 213D eligible expenses. Those are your FSA qualified expenses. The only eligibility requirement is the individual participating. They need to be eligible for their groups-based medical plan, but they don't actually have to participate as long as they have a primary policy in place that meets minimum value standards. That policy can be a spouse's, individual, even Medicare with any supplement.
Okay.
We even can supplement ICHRAs, which have been pretty popular. This is a short list of some of the items we reimburse. We really see quite a bit in the space of copay, coinsurance, and deductible, but this policy is so much more than your traditional gap plan because we're also going to cover things that may have been denied or limited by their base plan. Some of that falls under pharmacy. We see a lot of the new GLP-1s for weight loss. We also see other specialty medications, maybe drugs denied as not on the formulary. We also receive a lot of out-of-network claims, executive physicals. Dental and vision is very popular as well. We don't require they have a primary policy for dental and vision. So in the absence of one, we would just pay from $1.
Okay.
But outside of those main services, we also see quite a bit of therapy, chiropractic, and mental health, since sometimes they're limited to a number of visits. But we're really going to cover anything medically necessary that hasn't already been covered by another carrier. And even if it's not a 213 expense, we'll cover it with a letter of medical necessity. We're only going to ask for that letter of medical necessity on non-213 or non-FSA qualified expenses. Some examples of that are massage therapy. We've reimbursed nutritional supplements. We've even reimbursed a Peloton in the past. The only limitation in the policy is for services related to fertility. We limit it to 10% of the individual's annual benefit limit, but in most of our states, we do have the ability to waive that. If we waive it, there's an implication to the max out of pocket, but I'll mention it when we get to that slide.
Okay.
Any questions about what's covered, anything you hear about in the market?
No, so is this typically like offered as like a voluntary benefit, or is this employer paid typically, or is it a combination?
That's a good question. From our perspective, it's always employer paid. Now, we do have some groups with partners that fund their claims on the back end through payroll, but from our side of the business, it all is employer paid. Whether or not that partner is reimbursing the employer is really up to, their agreement with them. But we do see partnerships
Well,
do that.
So the employer is remitting payment, but
Correct.
the employees, like it could be a voluntary selection that they could make, and then it's payroll deducted.
You got it.
Okay.
That's correct.
Okay.
And this policy offers a selective advantage because we're fully insured and supplemental. We're not subject to discrimination testing. So this can be classed out. We often see it classed out by seniority. So we'll see class names like owners, shareholders, partners, C-suite. But
Can you say that again? Can you say that one more time?
Sure. About classing out by seniority.
Well, that it's fully insured and
fully insured and supplemental, which is why we're not subject to discrimination testing.
Interesting.
Yeah. And we have one competitor in the marketplace that's Armada Care. They are also fully insured and supplemental and can class people out. They just bill a full monthly premium where we have a pay-as-you-go premium.
Okay.
So outside of classing out by seniority, you can also class out by vocation, geography, tenure, by title. You can be really creative. We just have to stay away from true discriminatory classes like all women or everyone over 50. Our premium is very unusual for a fully insured policy. Instead of a full monthly premium, we invoice a fixed annual cost of $350 for each covered employee. We do not invoice for their family members, but we cover them. After that, we use a variable premium. That is the cost of the claim we're reimbursing plus 12%. And we invoice up to a max out of pocket we provide our clients. That's where our insurance lies on top of the policy. We also have a twofold tax advantage. Every dollar paid to BeniComp, it's premium. So that's why it's tax deductible to the client. And we only reimburse as non-taxable income. Do you have questions about the tax side of it before I move on?
I guess I'm just, if this is only offered to highly comped, I'm wondering how that's not coming up in discrimination. Like, maybe I need to connect with my compliance team on the fully insured and supplemental, but it feels a bit discriminatory of just what the nature of, such a significant financial savings and additional compensation essentially. And so then are they should there be any grossed up income or something to pay taxes on, or is it completely tax free to both the employee and the employer?
It's completely tax free. Because what's gone on, Andrea, is they've already used after-tax dollars to pay for the out-of-pocket expense. So what we're doing is we're putting it back in their pocket and we're not taxing it a second time. We're sending it to them pre-tax. So they're not getting, that double taxation. Because if you and I pay our copay today, we're using after-tax dollars. You know what I mean? So if I were to submit my copay to BeniComp and then get reimbursed, it would be pre-tax because I've already paid after-tax dollars. Now, we pay state premium taxes on all the claims that we reimburse. So they don't escape tax. We pay the premium tax so that the participant doesn't have to.
Oh, okay. Okay.
That may make more sense.
Yeah.
I also have a full compliance and FAQ packet I'm going to send you. And
that would be great.
Yeah, it speaks specifically to the fully insured supplemental side and the discrimination testing. And it even has copies of the regs and highlighted in certain sections for you to review. So it's really comprehensive. We were also just recertified by KPMG as a fully insured supplemental carrier.
Okay, perfect. That would be super helpful.
Yeah, absolutely. And of course, compliance, that's what we're talking about, super important in healthcare. I think compliance speaks to the fact we've been issuing the policy more than 30 years with no issue. And we issue the policy on paperwork through that state's Department of Insurance and Department of Labor. So we're not making the judgment that it's fully insured and supplemental. These states are backing that and allowing us to put paper through their insurance agencies. So the compliance, of course, very important. We issue our policy in most states, but there are some states we don't issue. Those are Colorado, Connecticut, Kansas, Maryland, New Jersey, New York, and Washington State. Now, if you have a New York-based client and they happen to have an office in Missouri, we can issue the policy from Missouri, and it doesn't limit us from reimbursing people that live in New York. We just don't issue policies out of New York, as an example. But we can use any physical location of the employer to issue the policy.
Okay.
This is a little bit about our benefit limits. When a group comes on board, working with our minimum participation requirements, they work with us to determine what annual benefit limit they're going to provide each class of employees. We do allow companies to class out and layer the benefit, so they could carve out owners at one rate, C-suite at another, and directors at another. Our benefit limits start as high as $200,000 a family, and they go as low as $10,000. Sometimes we can go lower than 10. It really depends on the overall group size and if there's other classes pointing to a higher benefit. So as an example, I just brought on a group of attorneys. The shareholder partners came on at $25,000 each per year, and then they brought on the rest of the partners at $7,500. We were able to dip below that 10K because we had that group of attorneys at 25. So the underwriting worked.
Okay.
This is, of course, a great attraction and retention tool. That's what we see our larger groups use it for, but our smaller groups with 1 to 3 participants really use it as a tax advantage. We can write policies starting with just one, just the owner, except in North Carolina, they require 2. I know you all are in the Midwest, but I don't have clients everywhere.
Yep.
So just wanted to mention that about North Carolina.
And is that in any of the documents that you'll be sending over, like the states where you can't issue policies? And
it will be in my email. How about that?
Okay, perfect.
For you.
That would be great.
So this is our flow of reimbursement. Super simple. We have a secure portal. If one of your groups were to come on board, we would hold a live welcome webinar, make sure everybody understands the benefit and how to submit claims. Then they'll have access to this secure portal. They'll be able to create a direct deposit form so that we can quickly and securely deposit their funds, and then they can start sending us their claims. For medical claims, we require the primary medical EOB. For dental and vision, again, we'll accept an itemized bill if they don't have primary coverage, as well as any of those over-the-counter FSA qualified items like antihistamines. Once we receive that EOB or itemized bill, let's say it's a $500 deductible, we're going to invoice the client $560. So we're just adding 12% to that claim. Once they fund that invoice, we'll keep the 12% or the $60, and then we'll reimburse the executive or participant $500 tax-free. That process is usually 5 to 7 days from the time we receive the claim until it's direct deposited into their account. So it's about a week.
Now, so why wouldn't groups just have like an HRA?
HRAs don't allow discrimination, and they also don't allow benefit levels as high as we go. There's, maxes on how much they can put into an HRA each year, and our benefit limits go from 10,000 to 200,000.
Okay.
So that's the main reason.
Okay. And I assume there's like is it just the 12% that they're paying? But you said like underwriting. So what is the underwriting taking into account, like an annual fee or something like that?
Underwriting is just taking into account how many people are on the policy and what are their annual benefit limits. That's all that it looks at, our proposals, and it lets you know what the group's fixed annual cost is. That's purely just the $350 times the number of employees. Mm-hmm. And then it lets you know what the max out of pocket is for that group. And I have a slide and a couple of slides that will show you what I'm talking about. Okay. And it'll be a little bit more clear. Now, Andrea, if you have self-funded groups, we do have the ability to reimburse participants using flat claim files. We do that for several of our self-funded groups. And so it prevents them from having to log in to receive reimbursement. We use those flat files as if they're EOBs.
Oh, okay.
And this is just more about the tax advantage. Now, this is our insurance piece. Up until now, our policy feels self-funded, but it is fully insured. In order for us to be fully insured, we had to take on some layers of financial risk. Our first layers are aggregate. We're going to take on a percent of responsibility for the policies that we issue. We determine the percentage split using actuarial tables. These tables look at those two things: how many people are enrolled in the policy and what are their annual benefit limits. The higher the limit, the more risk BeniComp's going to take on. This is a client of ours that has 4 employees. It's a small group. They have all 4 employees covered. So some companies don't class out, some of them just cover everyone. They actually moved to an ICRA. So they overlaid our policy on top of that ICRA. They layered the benefits. So you can see they're providing the shareholder with $200,000 in coverage, and then the employees at 10. But the company is offering $260,000 in coverage to those 4 people for 12 months.
Mm-hmm.
The middle column is 12% of the corresponding max benefit. So that's their worst case scenario, since they only pay for what's used. The last column is our fixed annual cost. It's the only guarantee exchange of funds between your clients and BeniComp. If we don't receive claims, they won't be invoiced. So if this policy weren't insured and everybody used all of their benefit, it looks like it could potentially cost the group $292,600. But we've actually issued a max out of pocket to the client of $154,800, putting BeniComp at risk for the rest. So even if we reimburse the full $260,000 to those 4 people, the most the client would pay for that is $154,800. Does that make sense?
It kind of. So I guess maybe I'm missing how the 154,000 is
Calculated?
calculated.
It's through actuarial tables.
Okay.
Yeah. And those tables don't look at the base plan. They don't look at a census to look at ages. They don't look at any of that. Literally, when you ask me to run a proposal, all I'm going to ask you for is the effective date, the name of the group, where they're located, and how many people are going to be participating. From there, we can run some proposals based on what the group is looking for.
Okay.
And yeah, but that's where our fully insured piece comes in. Instead of that full monthly premium, we just take on risk differently. Our first layer is that aggregate. Our second layer is we issue an AD&D benefit to each of the participants that is equal to their annual benefit, not to exceed $100,000.
Okay.
Now, if we were to waive fertility, I mentioned there's an implication to the max out of pocket.
Mm-hmm.
If it's waived, I'll just use the shareholder here as an example. If the company waives fertility from their policy, we would reimburse the shareholder the full $200,000 for services related to fertility. However, only 10% of it will apply to the group's max out of pocket. And that's for fertility only.
Okay. Is that for
The
states?
tax deduction, they still, get to use it as a tax deductible expense, the company, and we still reimburse the employee tax-free. It's just not going to get them closer to insurance kicking in.
Can this be paired with a high deductible health plan?
Great question. We believe that if you have BeniComp Select, you no longer have a high deductible health plan, so you wouldn't be eligible to contribute to an HSA. Now, we have a lot of CPAs that don't agree with us. Some of them think it sits outside the base plan. We, of course, are going to be more conservative in our interpretation. So we have that compliance packet, and it's client facing, so they can send it to their CPA and get direction. The problem is it's not written one way or the other anywhere. So it's up to interpretation, and everybody's kind of interpreting it a little differently.
Okay.
This is one of the last slides. This is really groups that we consider to be ideal. If you have groups with 2% or more shareholders, since they can't participate in an HRA, this is a compliant way for them to run their expenses through their business. We work with a lot of groups. Usually these are our larger groups looking for retention and recruitment solutions. A lot of times people ask for executive benefits, and the first thing they think about is disability and life. And a lot of more businesses are looking into what help they can get from medical benefits. The third bullet is really popular. We have a lot of one participant groups. These are your business owners, for some reason or another, already pay quite a bit of money out of pocket. Maybe they have a health condition or there's one in the family. This is a compliant way for them to take the money they're already spending and run it through their business. And we also work with a lot of groups due to high renewal increases that have had to really downgrade their benefits. This is a way for them to protect key people. And then last but not least, we have started seeing this built in as a compensation strategy.
How many clients do you have across your portfolio?
That's a good question. 2,500 clients and over 10,000 members.
Okay.
Yeah. And this is just some testimonials about what our clients are saying. We work with small mom and pop shops. We work with Fortune 500 companies. If I were to say an industry, we work a lot of white collar. So a lot of partnership companies like CPA firms, law firms, physician groups love the benefit. But we also have quite a bit of business, especially in your area, in manufacturing and construction, as well as healthcare and technology. And that is it. So I am going to send you this slide deck. And what I can do, Andrea, is I will send you the information and just copy Julie, Alex, and Michael on the email so that they have the material.
Yeah.
But I will send you the slide deck. I'll send you that compliance packet.
Okay.
I also have an executive summary that just kind of breaks down the benefit in one page. And then my email will have what I need to quote a group. If you ever would like a quote, if you send that information over, I'll typically get you a proposal back the same day, if worst case, the next business day. But once you get that proposal, if you want, we can jump on a call and review it. And I'm always happy to provide overviews to any of your clients.
Awesome. No, this has been super helpful. So you're our contact for any proposals, regardless of where the client is located.
Correct. I cover the US. So I cover all of your areas because I noticed you're all in different places: Minnesota, Missouri, Minnesota, and Nebraska.
Yep, so, we're all over the place.
You're all over. But yeah, it's a really cool benefit. A lot of people don't know about it. We just don't advertise. But it's something that is, it's not a fit for everyone because it's employer paid. It can get expensive, but it's a really great fit for profitable companies that are looking for tax advantages as well as recruitment and retention strategies.
Awesome. No, this has been super helpful. I've not heard of, this type of program. And I think that's because everybody's trying to cut costs, but I know that there are industries and organizations that really need to use it as a recruiting tactic. So this has been super helpful.
Good. And your client that you have with us now, have you already notified us that that you have the new BOR? Or
so we don't have BOR. They're still in the prospect phase. But they were kind of talking about it, and I had a lot of tax questions, and they were like, "We're not sure." So it's been in place for so long that I think they probably, it's on kind of autopilot. But I just was very curious on the compliance piece. So that was kind of the premise for the call. Yeah.
Well, that compliance packet hopefully doesn't put you to sleep, but it's a little lengthy, but it's comprehensive. So it'll answer most of your questions because there's frequently asked questions in the document as well.
Okay. Awesome. This has been super helpful. Thank you.
You're welcome. So I'm going to send my initial email with all of the stuff I promised, including the states we don't cover. And then I'll send a follow-up to all of you with the video in a few hours when I get it converted to YouTube. Hopefully today, if worst case tomorrow, but I expect it in a couple hours.
Okay. That sounds great.
All right. Thank you so much excuse me, for your time. You have a great rest of your day.
Yeah, you too.
All right. Thank you.
Thanks. Bye-bye.
Okay. Lots of questions about compliance. So yeah, so now